Hi, welcome to MyWealth.com. I'm Mike Conlon. I'm one of the senior instructors with the courses. Welcome to today's blog. Today's blog is entitled, Asset Allocations Are Insufficient in the New Economy. Okay, in last week's blog, I wrote about some stocks to keep your eye on for what's happening with what we're calling the new economy. Okay, whether or not you agree with the direction our government's going and the methods that they're using, right now that's not really important. You don't really have a say in the matter. Okay, what is important is how you position your portfolio for what may or may not take place. Okay, I just had my recent annual meeting with my mother last week, and we were going over her estate and her retirement portfolio. It's usually not a great conversation. I really don't like to think about stuff that's going on, or maybe life without mom, if you will. And the whole death conversation can sometimes be a little bit unnerving. Okay, needless to say, we have this meeting every year just to kind of review what's going on with her portfolio and make sure she's on the right track. What I did find was when I went through her financial statements that she was back in the same portfolio that she was in last year. And that, I pulled her out of the portfolio last year. She was lucky enough to avoid some of the downturn in the market, but sure enough, she was right back in it. So this past week, we actually called her advisor to see what was going on. And, when I talked to him, he said, gee, Mike, this is kind of our asset allocation model. And I said, well, what happened to, the other areas I wanted you to cover? We talked about oil, we talked about gold, we wanted to get some exposure in her account. And, it's not because I want mom to be, a day trader or something and try and time the market and these sort of things, but I just really wanted her to have more uncorrelated assets. Okay, as we saw most recently, when the market collapsed, basically everything went down. So we really wanted to try and change up what she was doing. No offense to Jim or his brokerage firm. He's been there for quite some time. He's actually done quite well for her. It's just their asset allocation model is pretty out of whack. We're talking about things to do going forward and how you can position your portfolio to take advantage of the new economy. Let's take a look.
As always, be sure to check out the written blog at www.mywealth.com/blog. All right, so we're talking about the 5 ways you can tweak your portfolio to really ramp it up and to give yourself a little bit more diversification here in what we're calling the new economy. Okay, the first way you can do this is to use ETFs as your investment vehicle of choice. Okay, they're low cost, they are more flexible, and can help you diversify more efficiently than mutual funds. There's basically an ETF out there for just about any sector of the economy or any scenario you can imagine. Okay. The second thing you should do is add currency ETFs to your portfolio. Okay, this doesn't have to be a major percentage, but something along the order of maybe like 4 to 8% should be sufficient. Okay, this will allow you to diversify away from the U.S. dollar, and it'll give you access to some of the other world's currencies. Okay, this can be advantageous to you if you think other countries are going to do a little bit better with their economy than we're doing here in the U.S. Okay, the next thing you can do is add commodity ETFs to your portfolio. Okay, again, this doesn't have to be a huge percentage, but you should think about having some exposure to things like gold or oil. Okay, as I'm sure you're aware, when you go to the gas station, gas prices seem to be going up again. Well, why is that? Well, it's because we have low interest rates here in this country, which tends to lead to inflation. Okay, so if you do have some exposure to oil in your portfolio, that'll lessen the effect of what you're paying at the gas pump. So that's just something to think about. And also, you may want to look at a diversified commodity index as well. Okay, so between these two types of ETFs we're talking about, both commodity and currencies, they shouldn't be any more than about 10% of your overall portfolio. Okay, depending upon your your risk tolerance, you may want to add a little bit more, maybe a little bit less, depending. But you really should have exposure to these markets as we are now in a more global economy. Okay, last thing you should do is rebalance frequently. Okay, by rebalancing these assets more frequently than you might otherwise in a normal portfolio, you're actually going to lock in some of the gains and take some of the money off the table. So, we know that gas prices can't go straight up forever, but if you rebalance, something like quarterly maybe, then, you can take a little bit of profits along the way. Okay, now, as you're doing that and you rebalance, there can be tax ramifications from time to time if you are not in a retirement portfolio. So just be sure to take a look at that if you do. Okay, so don't wait. Get in the course, get educated. Go to www.mywealth.com and learn about these relationships and how you can, really tweak your portfolio to do well in this new economy.
By knowing what is going on in the world today and what our politicians are doing to manipulate our markets, you can create a portfolio that can thrive under any circumstance. Because as we have seen recently, the traditional stock, bond, and cash portfolio can no longer keep pace with the new economy. So to learn more about how these assets perform under different conditions and what you can do to protect yourself, get involved in the investing course. Go to www.mywealth.com. Check it out. It's only $25. You get access to instructors. You can ask as many questions as you like. So I'm Mike Conlon. Thanks for being here with me, and I hope to see you in the courses.